In this video, we will take one illustration to understand the complete accounting process at the time of dissolution of partnership firm. The question is, there are two partners, Supriya and Monica, who were sharing profits in the ratio of 3:2, and their balance sheet was as follows. Okay, Supriya's capital is 32,500, Monica's capital is 11,500. Creditors appeared at 48,000 rupees and reserve fund was 13,500 rupees. On the asset side, cash and bank balance was 40,500, stock 7,500, debtors were 21,500 and provision for doubtful debts was 500, and fixed assets were valued at 36,500 rupees. The firm was dissolved on 31st March. Debtors realized at a discount of 5% on 21,500. Stock realized rupees 7,000. Fixed assets realized 42,000 and expenses on realization was 1,500. And creditors were paid in full. Okay. So we have to make the necessary ledger accounts. First we will make realization, then partners capital account, and then at the end cash or bank account. Now all the assets including stock, sundry debtors and fixed assets, these three assets we will not transfer cash, and provision will be transferred to the credit side of provision for realization account along with sundry creditors. So just now stock, sundry debtors at 21,500 and fixed assets at the book value will be transferred. All these are having debit balance. So to close these accounts, we will credit them and transfer to the debit of realization account. See, stock account 7,500, debtors 21,500 and fixed assets 36,500 rupees. Okay, you write two stock, two sundry debtors, two fixed assets. Okay, 7,500 book value will be transferred. Okay, now the provision was also appearing on the asset side, that will be transferred because it was having a debit balance, credit balance. So it will be credit. To close that, we will debit provision for doubtful debts and credit realization account. Debtors will appear on the debit side and provisions will appear on the credit side. Now from the liability side, capital account will not be transferred. Similarly, the accumulated profit will also be not transferred to realization account. So on the liability side, sundry creditors are left with a balance of 48,000 rupees. That will be transferred. Sundry creditors were having a credit balance. To close them, we will debit and realization account will be credited. So on the credit side of realization account, sundry creditors will be shown at 48,000 rupees. Okay. Again I am repeating. From the asset side, stock, sundry debtors and fixed assets will be closed, where accounts will be closed and transferred to the debit side of realization account. Okay, at their book value. All the assets from the balance sheet are transferred to the debit side of realization account. The entry will be realization account debit to stock, to sundry debtors, to fixed assets. In the same manner, from the liability side, creditors and the provision for doubtful debts will be transferred to the realization account. Okay, provision and sundry creditors 500 and 4,800 rupees. Now we have closed all the accounts. Now additional, we have to check the additional information for the amounts realized and settlement of liabilities. Debtors who were appearing at 21,500 realized at a discount of 5%. Okay, so debtors were appearing here rupees 21,500, they realized at a discount of 5%. So we will deduct from them 1,075 rupees. Okay, so by bank debtors realized 20,425. 5% is 1,075 rupees, that will be deducted from 21,500. So the amount received is 20,425 rupees. Okay, after deducting 5% from 21,500. Okay, in the same manner, stocks were appearing at 7,500, they realized only 7,000 rupees. Okay, so by bank stocks realized 7,000 rupees. Okay, in the same manner, the question says that fixed assets realized 42,000 rupees. So fixed assets 42,000 rupees. So in cash 20,425, 7,000 and 42,000. In total we realized 69,425 rupees. So we can write a single entry, bank account debit to realization. Okay, or we can pass separate entries for all this, but every time bank will be debited and realization will be credited. The debtor, stock and fixed assets account was already closed. So while selling them and when cash is realized, stock account or fixed assets account will not be credited. Okay, instead of them realization account will be credited. Okay, so the entry will be bank account debit to realization account for all these three cases. Okay, bank account debit 69,400 to realization account. Now in the same manner, question says that creditors were paid in full. Okay, the creditors were appearing at rupees 48,000 rupees. They were transferred to the credit side of realization account and they were paid in full. So to bank 48,000 rupees. In addition to that, there was an expense on realization, that is 1,500 rupees was paid in cash. Okay, now the total of the credit side is 1,17,925. From this we will deduct all these amounts. So there is a profit of 2,925. Okay, profit on realization is 2,945 and it will be divided among the partners in the ratio of 3:2. Okay, see on the top line, Supriya and Monica are partners who are sharing profits in the ratio of 3:2. So the profits will be divided among Supriya and Monica in the ratio of 3:2, that is they will get 1,755 and 1,170 rupees. Okay, now see from the balance sheet, still there is Supriya's capital account and Monica's capital is appearing. Okay, we have to settle their account also. So now we will make Supriya's capital account and Monica's capital account, and the balance in their account is 32,500 and 11,500 rupees. See the opening balances 32,500 and 11,500 rupees. Clear? On the liability side, reserve was appearing 8,100, 3:2. Okay, the reserves will be distributed among the old partners in the old ratio, that is 8,100 and 5,400 rupees. Now the realization profit will be transferred from realization, that is 1,755, and 1170 rupees. Okay, no other transaction is